Hey, I'm Sam, I'm from Trading Strategies Tested, and today we are going to take a look at Bollinger Band counter-trend bounce. Now this is one of our new trading strategies we're going to take a look at, so let's take a look at the rules. Now this is based on the famous Bollinger Bands by John Bollinger, and the way that this works, or the way the Bollinger Bands work, is that they tell you about the price and how far it deviates from the average. So really it tells you where the market is at. And to use this strategy, we're going to set the Bollinger to a length of 20, the deviation of 2, and we're going to add a 200 EMA line to determine the direction, because the important part of this strategy is that we are not only going to look at whether price is at a point where it is, statistically speaking, very far from where it normally is, but that is also doing that counter to the trend. In other words, bouncing off the trend, and those two things together make for quite a powerful combination. So we're going to trade if the price is above the 200 EMA, and we're going to sell when it is below the 200 EMA. And for a buy setup specifically, we're going to look for a candle low that pierces the lower part of the Bollinger Band and then closes above that lower band on the next candle while we are in an uptrend. And in order to do that, we're going to use the EMA and just check the slope and make sure that our current point of the EMA is higher than the previous two. For a sell setup, it's going to be either simply reverse of that, and we're going to exit when we touch the opposite Bollinger Band. So that's basically the setup, and this is what it looks like if you take a look at a chart. Just a quick example. So here we have the lower Bollinger Band. There's the upper. We have it piercing through the lower Bollinger Band. We are clearly in an uptrend, and we're going to enter over there, and we exit when it touches the opposing band. So that's the basic setup for a buy. For a sell, obviously it's just the reverse. So let's take a look at our chart. And what I have here is the Euro USD, and I set it to 15 minutes because with Forex trading, I found personally that 15-minute is a pretty good time frame to use. I'm not sure if this strategy would be that effective on lower time frames. You're welcome to test that yourself, or maybe at one point I'll do that, but for now this is what I'm going to use. And you'll see over there's a little arrow pointing up. So what I did is I actually created a piece of code over here in TradingView that encapsulates the basics of this trading strategy. And you're welcome to get this from me as well. I'll probably provide the links below. You're also welcome to get the PDF that I just showed you that gives you the rules. And I'll update that with the trading results. To track the trading results, I'm going to use a little counter on the top left, and it's going to track the percentage winners and losers, as well as the trading value. And I'm just going to go for the number of pips, points, and I'm just going to basically take it as 10 times that, so micro pips. So you'll see once I start entering the values, just to track the risk reward versus not just winners and losers. All right, so that's it. So I'm going to do the first one, and after that I'm going to basically mute the mic and just continue from that point onward, and I won't be talking as much. So we can do this without taking up too much time before we get to the results. So in this case, it's a winner. Start over there. I put the stop loss. I'm just going to put the stop losses throughout at a reasonable level. In other words, either the previous low that I find or a good support resistance. In this case, it's basically more than one way to do it. And there's a nice little spot over there to do it. And we can see over here, I'm going to take that value, 160. So I'm going to enter that in here. And there we have a first winner. And now you have an idea of what that looks like. And I'm going to continue now and search for further results. Okay, I'll see you after hopefully 100 iterations. Let's see how it goes. Okay, I have to quickly comment on this particular one. I think that a human trader would have taken this, even though obviously this slope is ever so slightly negative if you actually look at the actual figures. I think a human trader would have said, okay, well, this is clearly trending up. Enter there and exit there. So I'm going to take this as a winner. I hope you don't mind. I'm trying to stick to the rules as closely as possible, but I think this is a good exception. All right, and this is our last trade. We are at 100. Can you believe it? So there we go. We actually have it sitting at exactly 50%. Money-wise, yes, you would have come out ahead. Currently sitting at 68 versus 32. So money-wise, not bad. If you have good control over that, but in terms of winners and losers, it's literally 50-50. Now, is there room for improvement? Yeah, I think if you take this as a basis and put in some extra controls and stuff, I think you could make it work better, especially if you maybe stayed in some trades longer that were already winners, instead of maybe taking off all your money once it hits the opposite Bollinger Band. Maybe you want to take 50 off and then see if it will continue lower, because in a lot of cases it's the beginning of a new trend. But in other cases, I think this would easily be one of those strategies where when you see it on paper and you just take a quick look at the charts, you would think that, okay, this looks like a really, really good strategy to follow. But if you follow it precisely, in other words, if you code up an indicator to follow the rules that you've set out, you'll probably find that it's a little bit more difficult than what it at first seems, because in a lot of cases you might overlook something, or you might almost cheat yourself when you are doing your own sort of check by eye back testing. You might cheat yourself into thinking that this is actually better than what it is. In reality, based on as far as I can tell, my testing, and of course just my testing, just on one instrument, 50-50. In terms of winners and losers, money management is very important. If you are on top of your game, money management wise, if you limit your losses, also, if I limited my losses more than than I did in some of these cases, if I just said, okay, well, I got a maximum loss of X, it would have been even better, maybe more closely like a 70 or maybe slightly over 70% to 30% in terms of money management, winners and losers. But yeah, so is it profitable? Well, yeah, it looks like you could make this profitable, at least in the limited test that I did. Is it a perfect strategy? No, by no means whatsoever. Roughly 50% chance that you are going to hit either a winner or loser. Hey, I hope you enjoyed that. Please remember to like and subscribe, and I'll see you next time.